Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It's finally Friday. Where has this week gone? It is the 23rd of April. We've got one more week to go, and April is over. And after April, we've got May. Folks, where did 2021 go? I'm still trying to figure out where 2020 went. All right, let's get into today's report, and let's get into it right now. Bond market's holding steady. It's now above the 50-day moving average. I don't think bonds are going to go too much higher. I think we're going to kind of consolidate, maybe go to the 145 level, kind of retrace 50% of this move, and then start coming back down. Bonds going down, which means interest rates going higher. Look for rates to go higher beginning of next quarter. In terms of economic data, we've had a really good jobless claim report yesterday. Consensus was 615,000. We hit 547. Folks, last week, we hit 576. Now we're at 547. This is really, really good. This is really telling me now for the first time, significantly, that the COVID vaccines are having an impact on the economy. This is for the week ending 4/17. This is last Friday. 4/17 is a week ago. And this is telling us that unemployment is dropping by like 200,000. Look at that, 193,000 from a week ago. This is very, very positive because we were holding between 700,000 and 800,000 new claims every week, and then it dropped to low 700s, and then it dipped to 600, high 600s, and then it dipped right into the 500s, and now it's at 547. These are very, very, very good numbers. Let's talk about indexes. We're up slightly. We were down yesterday, but this is random. Anything with Dow up, 9 points, S&P up 9 points, NASDAQ up 20 points. That's just random trading action. Market's going to open up in about 90 minutes. I don't want you to make too much of what you're seeing here because this is really random. In terms of economic data, today we've got new home sales. Existing home sales, new home sales, they've been softening up, but they are so strong nonetheless. And most of the correction is due to lack of supply. There's just not a lot of homes out there to sell. But home prices are still holding steady, and that's very, very strong. But the biggest report was the jobless claims. We have the PMI today, and we have the new home sales. Again, I'm not expecting too much of a market boost or dump as a result. And the numbers, even if they're a little lower or a little higher, they're going to be in line with estimates. Home sales have been just on fire, and I mean on fire. Let's talk about what to expect from the global markets, or let's see what global markets did so we can expect what the U.S. markets are going to be doing into the opening. And folks, I'm always looking at global market reports because global markets, it's what's happening middle of the night while we're sleeping, and it's going to have an impact on the U.S. market as we open. So it's really important to see why the market opens the way it does, and global data is the number one indication of what's going to happen. So global stocks were mixed Friday after Wall Street fell after gossip, rumors, and reports from undisclosed people that President Biden is going to raise taxes on the wealthiest investors. The words that I would have for him right now are not pleasant. Biden will propose raising tax on people who make more than $1 million on stock trades. Man, that Biden, I'm going to have a little talk with you about this. I'm not happy about this. But we've had better corporate profits, and U.S. hiring has been very positive, as I just mentioned, with the jobless claims. Unease that inflation and interest rates might rise, and renewed COVID infections have prompted some governments, like Japan, for example, to tighten anti-disease controls. Canada, for example. According to Bloomberg, this whole tax raise that Biden wants to talk about, which I'm really upset about this. It would raise capital gains to 39.6% for investors who make more than $1 million. That's bad. Or more than double the current rate of Americans in that income bracket. That's bad too. That's double bad. It said a separate surtax on investment income could boost the total tax rate for wealthy investors as high as 43.3%. That's bad. Very, 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 very bad. Tech stocks, banks, and companies that rely on consumer spending skid on that news. Now, the last round of U.S. government stimulus helped lift retail spending. I told you that it would, the biggest global market, the U.S. market. Now, investors are waiting other proposals, including tax changes and Biden's proposed $2.3 infrastructure and spending package. I don't think he's going to get what he wants, but we may get some of it. Investors are also looking for signs of possible economic improvement as companies in the S&P 500 are reporting better than expected numbers, which is lifting the NASDAQ and to a lesser degree the Dow and the S&P. Thursday, Labor Department reported the number of Americans applying for unemployment benefits, that's what I was just talking about, fell again last week to its lowest level since the pandemic struck. That's this right here. This is really, really positive. This is what I was talking about right here. Lowest level since the pandemic struck, 193,000 better than the prior week. This is really good news. China, on the other hand, the world's second largest economy and major importer and exporter too, rebounded late last year, and the United States is showing signs of a solid recovery. Europe, other parts are lagging. Canada, South America, not doing well at all. Now, looking at the S&P 500, I'm going to tell you folks, we're going to hit that 50-day moving average. The momentum levels are just too high. It's going to huff, it's going to puff. That rubber band is stretched out, and we are going to hit momentum levels. There's no question about it. We're going to hit that 50-day line. It's just a matter of time. But with that said, I want to show you guys a couple of stocks, 3 new stocks that are bullish, that are in the NASDAQ 100, that are in the top 10 percentile, and a bearish play. So let's talk about the bulls, and then I'll talk about the bears. So first stock getting some love, Heinz. You know, people are starting to go out a little bit in America. They're starting to go out. What do people eat when they go out in restaurants? Ketchup. People love ketchup. And what do most American restaurants have? Heinz ketchup, of course. Look at this nice, strong trend. Beautiful, right? Nice, low volatility continuing. I like this. I like this trend. I think it's going to continue. I'm not sure about the fundamentals other than the reopening play, but I like this trend, and I'm liking Heinz. Now, I would probably wait for a little pullback, but with the low volatility and the fact that we're not moving parabolically like this. See, when we move up vertically, parabolically, look at the volatility. But look at what happens when we're moving basically in a range. Nice and smooth. When volatility is nice and smooth, it typically means that we can have extended trend movements. And I like this. Also means options are not overextended. So I like Heinz. I'm not sure about the proper positioning. We're going to add it to our radar, but I like the stock right now. Next stock that I'm liking, and all these are showing up. Let me show you this. This is my cumulative strength index for the NASDAQ 100. So look at Heinz. These are like the top, maybe not top 10, maybe top 15%, if you will. But Heinz is showing up on here. Google is starting to show on here. And CDW is showing up here. Now, the rest have been on here for a while. But once stocks get up to the top 10, 15 percentile, they tend to really rally. For example, Expedia. Remember I talked about it like a month ago? How about Marriott? Still on my list. How about NetApp, Western Digital, Lam Research, Applied Material, Moderna? Nothing changed. Let me go back 3 months ago. Let me see here. Moderna, right there, number 5. Right now, today, Moderna, number 1. You see what I'm saying? Once they get up here, they get really hot. That means that means they're the strongest outperformer in the NASDAQ. Next one, Google. I like Google right now. Now, I know I've been kind of hard on the FANG stocks, but the one FANG stock that's been just killing it and completely bucking the FANG trend, if you will, is Google. It's been breaking out nicely. It's been moving in a nice, strong trend. Yes, I do believe we're going to have a pullback to the 50-day line, maybe a little bit lower. I would wait right now, but I like Google. Out of all the FANG stocks, Google never stopped going up. Look at last February. Look at that. Nothing. Just continued moving up like it was a growth stock. While Amazon, as you will see right here, see, peaked out in September and has been moving sideways. But Google, Alphabet, Google, whatever you want to call it, it's been moving nicely. Now, again, I do believe it's going to come lower. I think it's due for a bounce down, just like, not a bounce, a pullback. But I think Google is a good stock to start looking at. So Heinz, Google, and one more, CDW. Love the stock. Now, again, it's starting to move. It moved vertically, not parabolically, but vertically. But now it looks like it's entering a sideways choppy trend. And this stock is so strong, I don't even know if it's going to pull back to the 50-day line. It may just pull back to the 173 level, but I like this stock near the 173 level. So my bullish stocks are Heinz, Google, and CDW. And CDW, if you're interested in what they do, They do information technology, retail catalog, mail order, technology products for businesses, government, education, healthcare. Stock is up 77%. I like this stock right now. And again, it's bucking the trend in the NASDAQ right now. Look, I mean, this is a good trend. So I do like it, and it's trading above the September 2nd FANG, all-time FANG high. Now, in terms of bearish stocks, I'm actually surprised because I thought TRIP was going to rally ahead of summer because people buy tickets, they go out of town. But it looks like this stock peaked out. It didn't participate in the last two rallies. It looked like it peaked out around March. It's been going down, and it can't even go above the 50-day moving average, while the S&P is literally at new highs or close to new highs, as you can see right here. So I'm turning bearish on TRIP. And it's right now, it went to the twilight zone, which is the difference between the 50-day and the 200-day line. And now it looks like it's abutting the 50-day moving average. And what I'm seeing is a 90-day low, or thereabouts, maybe a 50-day low, and a 10-day high. And I think the stock is going to come back down for another round down. So if it breaks above the 50-day moving average for 2 sessions, I would get out of it. But otherwise, I would short it right now with the goal of hitting the 200-day moving average, which is at the $33 level. So we got 1, 2, 3 tops. It's breaking down right now. It's an ascending triangle, but again, it's really bucking the trend, and the relative strength on this stock is moving lower. So I'm going to go bearish on TRIP until I see it breaking above the 50-day moving average and trading above the 40 level. But till I do, and if it breaks down right now, I'm going to be bearish, and I'm going to write it down to the 33 level. And I would put a stop loss 2 days above. I would put a time stop or a price stop 2 days above this blue line, like this right here, where the bottom doesn't touch the blue line. Just get out. But if it continues trading below the 50-day moving average, then this sucker is done. It's just overdone. Now, folks, I know it's Friday. I know you've got big plans for the weekend, or at least time to relax this weekend. But I've got something important for you, something timely, something I need you to pay real good attention to. Folks, we've had some real wild swings in the market recently, and we're not done yet. And I'm willing to bet none of us have been able to time these moves. Not 100%. It's been really hard. Nobody has 100% market timing. But Wall Street legend, heavyweight trading champion Chuck Hughes, he has a brand new strategy that's giving everyday traders like you a chance to profit on thousands of stocks. Yes, thousands of stocks. But get this, regardless of the direction that the stock market goes. That means you can make money with Chuck's strategy if the market moves up, down, or sideways, and it has an accuracy of 96.3%. You have to check this out. Imagine investing and trading and not having to worry about current market momentum, how the bond market will move tomorrow, if earnings will match my expectations, or how economies are recovering from the pandemic. Imagine if you can put all that aside and forget about market direction and still generate top-line returns. Now, are you ready to learn how this strategy is even possible? By now, I'm sure you're pretty curious, and I would totally check this out. This is very, very cool. Click on the link below to get more information about Chuck's weekly profit generator. Do it now. Stop worrying about market direction. Make money regardless which direction the market goes. You don't need a big account. You could do this in an IRA account, and it's beginners friendly. You do not want to miss out. Chuck's weekly profit generator is the key to your happiness, at least in my opinion. And I've seen people give us amazing reviews from this. You've got to check it out. Follow the link below. Check it out now. And as always, make sure to like this video and subscribe to us if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post new videos. And folks, follow the link. I want you to learn about Chuck's weekly profit generator. Do it now and have an amazing weekend. I'll talk to you guys next week. Bye.